What is up, guys? It's your boy Hove back with you again for another gold technical analysis video. First, I got some feedback in my last couple videos that they were hard to see because of my colors / screen size, so I adjusted the candles to default and increased the font size on the fibs. So let me know in the comments if that helps to see things a little bit more clearly, and if you like it this way or you like it the other way better. So let's get into it. Alright, so I promise to keep this part less than 15 seconds, but let's do a quick recap of the last month or so. So back on October 20th, I posted this outlook for gold looking at one more leg down for this diag to complete the correction. Then on November 18th, I posted this setup for members looking for an entry on our blue box, which we tagged a few days later. After that, on November 28th, I posted another setup to add or even get a first entry, and since those, it rallied exactly where we thought it would, for roughly 6%. So that leads us to today. Where are we and what can we learn from the price action that has developed since? Let's first start on the micro to get some more details, and then we'll jump back out on the macro to see where it all fits and forecast where the price of gold might be for next year. Before we do, if you like the content so far, make sure to subscribe and hit the like button because we do weekly outlook for Bitcoin and the S&P 500 every Monday to help you navigate the week ahead, as well as midweek videos on different traditional and crypto assets. By the way, this is the new chart setup I was talking about, so be sure to let me know in the comments if it looks a little bit more clear for you guys. So I've adjusted my count a little bit since my last update. My primary expectation is that this is the fifth of an impulse off the low, and we should get another push higher before it's all said and done. A few reasons I'm leaning this way is one, the wave count looks pretty clear. Two, we're seeing those divergences being put in on this fifth. It looks like it needs one more push up to complete. And looking at the oscillators, it kind of gives the same clue that we need that one more push that I'm talking about. See how we have divergence in the RSI and we see divergence in the strength. Sometimes when it's unclear, you can use the oscillator to determine if it's done. So right here we have wave 1, 2, 3, 4, and I would expect one more push up on those divergences to complete the move. Now I can easily be wrong. That small move at the top could have been a fifth, and this move is done. There's also a few alt counts that I'm keeping an eye on. First would be this potential diag, though it would have one more high to go. Second, this being a completed zigzag that we've talked about before. Regardless which one it is, we got a nice move off the low where we were expecting and tagged our algo target. If price action ends up breaking market structure, we'll look to long the retrace to catch a potential 3 or C wave, which is our bread and butter for Elliott Wave. So let's jump out to the macro and see how it all fits. So now we're out on the macro. If we get that move up to 1838, or even if it's dead here or we get a little bit higher, we're gonna be looking for a 3-wave move down into support, which could be anywhere from our 50 down below our 618 for a wave 2. The C or 3 is a great setup because it looks like an impulse off the low, but we don't know for sure whether it's gonna be a 3 of our 5th or a C of a zigzag. So we have a potential 11% trade for the scalp of C, 21% trade for the scalp of 3, and 35% trade for a macro swing. Now, I'm not saying you spray and pray. This isn't Counter-Strike. We won't respawn if we blow up our account. We'll have to see where this tops and how the price action develops so we can start finding confluences to pinpoint our entry for a high risk reward trade. So make sure you follow me on Twitter at SenseiHove because I post more frequent updates on there. So pulling way out here, I've been expecting this $2,400 level for a long time, like I posted here on my Twitter, but I don't think that's the ultimate target. Now, way out on the monthly, let's start projecting for potential top confluences. First, we'll throw some channels on, starting with the most immediate. Next, we'll do the macro one. Man, see how it tagged it perfectly there for the retest? Now let's do some trend-based fib projections. First, wave 1 projected from wave 4, then wave 3 projected from 4 on the immediate degree. Now we'll do the same on the macro. So you can see confluence is building around that $2,300 to $2,400 level. So zooming out a little more, we're seeing some higher confluence around that $2,600 level. So my first target for gold is that $2,300 to $2,400 level, but if things get really frothy, I could see a blow off top style up to that $2,600 to $2,700 level. Ultimately, it's still early to call a target. For all we know, this last wave could get some kind of extension and we blow through 2,700. We'll keep an eye on it and adjust with more price action. Make sure you subscribe because more videos like this are coming. Also, remember to comment if the adjustments to my chart made it easier to see. That's it for this one. I'll see you next time.